Hello and welcome to MacMillan Estate Planning's MacMillan Moment video presentation regarding joint partner trusts, or we call it Secure 65. My name is Henry Villanueva, and I am one of the lawyers and estate planners here at MacMillan. Certain concepts in this brief presentation may not be applicable to you as an individual or as a couple or family, and we strongly encourage you to obtain independent and professional advice so as to make sure that these would apply to you and be best suited to your needs. If you are an individual 65 years young, or maybe a little bit older, the Income Tax Act of Canada provides you with additional and alternative tools for you to be able to transfer your assets to your spouse or to your common law partner on both a tax-free and a probate-free basis. Your traditional last will and testament is not an estate plan. It does not provide for ways by which you can save on tax or any tax strategies to that effect. Nor does your will provide for mechanisms that will provide for adequate cash flow while you are retired. For families with a net worth in excess of $1 million, you have outgrown your will and you need to be upgraded to the next level of comprehensive estate planning, which is trust planning. Why would you choose a Secure 65 in lieu of a will? A couple of reasons. It is tax neutral, privacy, no probate. I repeat, there is no probate required. There is no disruption in the management of the assets. Your assets are protected, and there is minimal risk for estate challenges. When we talk about tax neutral, we talk about the concept that you are able to transfer or roll your assets into the joint spousal trust on a tax-free basis. Whereas privacy or private means that the assets that are held in this trust are private and confidential, and no one has access to this information other than you as a couple. No probate, meaning no fees or disbursements related to probate, and this reduces the costs that will be spent by your family upon your passing. No disruption in the management of the assets. The trustees will continue to manage these, and there's no interruption in the event of loss of capacity or the probate process. And there is no need for a power of attorney for assets held in this Secure 65 trust. Your assets are protected against creditor claims or claims from a future partner or spouse. And in regard to estate challenges, it is more difficult to challenge the settlement of the Secure 65 trust than it is to challenge the terms of a will. Let's discuss what assets can be transferred into your Secure 65 trust. These assets include your principal residence. And one of the primary benefits of that is that originally your primary residence may be acquired at a lower cost, and when you transfer these assets into your trust, you don't have to worry about the fair market value or any tax to be triggered upon that transfer. Another asset that you can transfer into this trust are your corporation's shares, be it the shares in an operating company or a holding company. If you had acquired your shares at $1 per share and are transferring them at a value of $10,000, $20,000 or more $1,000, you trigger no tax upon that transfer. Also, real property or real property investments such as apartments or rental buildings can be transferred into these trusts on a tax-free basis too. Again, saving you money from the dispositions tax attached to the fair market value difference between the adjusted cost base. In addition to the real estate, you can also transfer investments in accounts. However, these are recommended to be non-registered investments, and for assets or registered accounts such as RRSPs or Registered Retirement Savings Plan accounts, or RRIF or Registered Retirement Income Funds, we do not recommend that you transfer these in toward your trust, since they have designated beneficiaries or those that would receive these trusts outright. Furthermore, for foreign property, we don't recommend you transfer these into your joint spousal trust, since they would fall upon the tax laws and the legal implications of the country to which those lands are situated. What are the drawbacks? In regard to joint partner trust, we have to be mindful of certain challenges, including property contribution, where only the settlor may contribute to the assets into the trust, whereas capital receipt, only the spouses themselves may be beneficiaries of the capital and or income in the trust. There are costs for legal and accounting fees to settle the trust, as well as accounting fees for preparation of T3 tax returns due at the end of the year. And also challenges in regard to control, whereby if you want more control, you may need to appoint an additional trustee. And challenges in regard to charitable contributions with respect to contributions and charitable tax credits. What is the design process for a joint partner trust? The first step is, of course, the creation or the settlement of the trust deed to establish the trust, whereby you would appoint trustees, the settlor, and the beneficiaries as well. The next is the asset transfer, where you choose which assets you would like to transfer into the trust, including the principal residence, assets and investments, real property, or corporate shares as well. And of course, registration of those assets in the name of the trust or in the name of the couple or spouses as a bare trustee in favor of the trust. Also in regard to future appointments, whereby we should be mindful that life goes on and there may be a passing of one of the spouses, and we would have to prepare or react and provide due diligence or courses for that event. Also, in regard to case study, we have a sample in the diagram. John and Jane used the Secure 65 as the center point for their estate plan. They placed several joint assets and sole assets into their custom trust. And following the passing of the second partner, they designed this trust to trigger the creation of several other trusts that will help to secure a harmonious legacy for their family. And these trusts were the Incentive Trust, which is for their grandchildren that will fund their post-secondary education, and Family Business Trust that will hold their family business, transferring it tax-free to their successors, a Family Heirloom Trust as well, that will secure their family cottage for the benefit of their bloodline, protecting it from loss due to a divorce or undue capital gains tax bill. At the end of the day, we are here to help you create a comprehensive estate plan and safeguard your significance. Thank you for joining us today for MacMillan Estate Planning's MacMillan Moment presentation regarding your Secure 65 Joint Partner Trust. Again, we reiterate the benefits of you constructing or settling your Joint 65 Spousal Trust, which would include saving on taxes, providing for privacy, saving on probate fees and disbursements, having protection against creditors as well. We look forward to providing you a complimentary virtual consultation at MacMillan Estate Planning, and you can reach us at our office at 403-266-6464 or inquiry@macmillanestate.com. Again, thank you so much, and we look forward to safeguarding your significance.